For months, Trump's economy looked unstoppable. Jobs were up, inflation was down, the stock market hitting record highs. Even critics had to admit things were going better than expected. But then, last week, two reports dropped, and they tore that narrative apart. One showed inflation isn't under control. The other revealed that job growth wasn't just slowing, it had collapsed. So what changed? And how did almost everyone miss it? Let's break it down. It all looked smooth on the surface. Inflation was falling down to 2.3% in April, barely above the Fed's 2% target. Energy prices helped too, with oil dropping from $80 to around $65. That kept headline inflation low, even as tariffs loomed in the background. Then came the Q2 GDP report. After a slight dip in Q1, mostly blamed on a surge of pre-tariff imports, the economy rebounded, growing at an annualized rate of 3%. And jobs? In June, the economy added 147,000, blowing past expectations. To most people, it looked like Trump had defied the odds, but that illusion didn't last. On Thursday, the Bureau of Economic Analysis released the core PCE index, the Fed's favorite inflation measure. And the news? Not good. Core inflation rose 0.3% month on month and hit 2.8% year over year, way above the Fed's target. Worse, this wasn't driven by booming demand. Consumer spending barely moved, just 0.1% up. Most of the price increases came from housing, utilities, and healthcare. So what caused the jump? Economists now say Trump's tariffs are finally catching up. Many businesses had delayed price hikes, hoping Trump would back off. He didn't, and now they're passing the cost to you. That was bad enough. But Friday's jobs report? It blew the floor out from under everything. July's job creation came in at just 73,000, but the real shock was in the revisions. June's original 147,000 jobs revised down to 14,000. May's 144,000, now just 19,000. Let that sink in. 2 months of job growth were basically erased. And it gets worse. Outside of healthcare, the economy added 0 jobs in July. And in the months before, job growth was negative. Even the unemployment rate is misleading. It's being kept artificially low because more people have simply stopped looking for work. When you factor those people back in, the real unemployment rate jumps to 4.9%, the highest since 2016, excluding the pandemic. So where's all the growth coming from? 2 words: artificial intelligence. Buried inside that strong Q2 GDP report was one massive outlier: AI spending. In just 3 months, America's 7 biggest tech companies spent over $100 billion building data centers for AI. That single category added nearly 1 full percentage point to GDP growth, more than domestic consumption. And that's not even counting the ripple effect. Construction workers got paid, suppliers got orders, and investors got excited. Stock markets soared, driven by AI hype. But here's the danger. If AI delivers, great, it's a productivity revolution. But if it doesn't, or if the rollout takes longer than expected, that spending disappears. The stock market tanks, and the economy stalls. Right now, we're betting the entire recovery on one unproven boom. Here's the reality. The U.S. economy is now being propped up by 2 pillars: healthcare and AI. Consumer demand is soft. Job growth is vanishing. Inflation is creeping up. And tariffs are quietly adding pressure at every level. That's a classic stagflation setup. And the warning signs are everywhere. Even the Federal Reserve seems trapped. Cut rates and inflation could surge. Hold steady and job growth might collapse. Either way, the illusion of stability is cracking. Last week's data changed the story. Trump's economy looked like it was defying gravity. But now we see the truth. The job market is weakening. Inflation is rising. And the only thing holding up the numbers is a speculative AI spending spree. If that boom slows, or if the tariffs squeeze harder, the whole thing could fall apart. So the question is this the beginning of a bigger crash? Or just another bump in a dangerously artificial recovery? Let me know what you think in the comments. And if you want more no-fluff breakdowns of what's really going on in the economy, make sure to hit subscribe, because the headlines rarely tell the whole story.